Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are happy to have you with us today. As always, I have my great friend, the mastermind of this operation. He is Mr. Al Connickson. Al, how the heck are you doing today?
Pretty darn good, Josh. How about you?
I am doing fantastic. It's always great to be back every single week helping our Retire Young family make better investing decisions. Al, we had another great week in the markets. We had some big sell-offs, but we also had some nice gains in the week. And what we're going to talk about here today is a lot about common mistakes the public makes, but how to eliminate them, because we are seeing all this volatility, but the average person is typically trading and investing off of emotions. So as we're raising awareness to financial illiteracy, we want to help people with those investing decisions to have more comfort and confidence in what they're doing. So Al, before we do that, let's recap the markets. What's happening? Talk about some of the volatility, some of the opportunities we may see in the next coming months, years. Let's hear it.
Well, I think it's pretty clear, Josh, that really what's been moving this market with these big up days and down days is one of two things. Either it's news on a vaccine with the coronavirus issue, or it's news about the stimulus package or lack thereof from Congress. So those are the two things that really have been moving the market and probably will be for a while. We even went through earnings season. We're in earnings season, and that also has the potential to move individual assets or the market. So we're going to see this volatility, these big up and down moves here for some time, which is a great thing, especially for short-term traders. That just simply means that the price is moving quicker into areas where you want to look at selling, or quicker into areas where you want to look at buying. And what we're seeing really is that the market is moving really almost totally on speculation, not on fact anymore. And again, that is helpful to us because it's the kind of the emotional traders that are out there that are causing these big moves up and down, again, right into the areas that we're looking for as educated investors and traders, where we know buying and selling opportunities are kind of living in the market.
Yeah, you're right. I mean, so with these, we have a lot of different things going on in the world right now. You have the election, you have the coronavirus, like you said. How are you helping people, I guess, have more confidence in those decisions, so they're not making those common mistakes, but really, how are you helping people with that emotional side of it?
Yeah, well, we help because we're a financial education business. We teach strategies that are aligned to help people achieve their income and their wealth goals. So those are either immediate needs, short-term needs, or their long-term future needs. And to do that, we provide a depth of learning that helps our students become proficient and confident, and there's that C word, confident, in the use of different asset classes. And the reason that's important is knowing the right vehicles to help navigate different trading terrain, and it's very, very critical. It's very similar to having a Ferrari and a Jeep and deciding to go off-roading. Which of those two are you going to choose? Probably the Jeep. If you're going to take a nice cruise down the California coastal highway, you're probably going to choose the Ferrari.
Yep, take the top down.
Sure, and the same thing is true in the markets. There are different assets and different strategies that are needed and used in different market conditions. And just listen, there's no guarantees. No one knows for certain how a trade or an investment is going to do. But that's why it's so important in an education to have an edge, to learn about how to develop an edge and how to increase probabilities, and then just let a trade play out. One component of that being confident, which is so important, is setting up a trade. So if you're right, your profit is preserved, and if you're wrong, you're still right. And what I mean by that is that learn to take a small loss and then move on. Really, there's 5 outcomes or potential outcomes to any trade or investment. You can have a big loss, a small loss. You can break even, have a small win, or a big win. And so out of those 5, if you can eliminate the one that is the most damaging, that's a big loss, then you only have a small loss, which can be offset by small wins, and you're left with the big wins. That's our goal, is to help to achieve that situation where you're putting the probabilities in your favor.
You're right. That's one of those major common mistakes. Is most average investors, the public, has a bunch of small winners and a couple big losers
Right.
where it hurts them. But when you're helping people with that confidence to flip the script a little bit, that's where they have those investing decisions and they have more comfort with that too.
Yeah, exactly. And, we talk all the time about how we love small losses. And the reason is that a small loss, if taken, can never be a big loss. And that really is what you want to eliminate. And then the edge that I mentioned, that's really kind of minimizing the clutter and the complication that's out there, and then concentrating on what happens on a reliable and repeatable basis. And that is identified on a price chart in advance on a reliable basis, in a reliable way. You just put it another way, just follow those that impact price movement. And who does that? It's the smart money, the big money, the institutions, the hedge fund managers, guys like maybe Warren Buffett.
Yeah. Well, those guys, I mean, it takes the millions and billions of dollars to actually move the market.
Sure. Yeah, and when you were talking about price movement, we're looking for what we call a quality trade, and that's part of the education, is identifying that. It's not quantity that matters, it is quality. If you're trading with quantity, you're just providing an income for a broker. Providing with quality, or providing or identifying quality trades, really is identifying something that gives you that high probability of it succeeding with a high profit potential and low risk entry point.
You're right. I mean, having quality entry points and exit points, when you have those and you did your analysis, you have more confidence in those decisions. So in trading and investing nowadays, it's electronic. So you have to be decisive and be able to take that trade once it's there. Once you have everything that lines up, then place that trade. And you have to have that edge. That's the key to trading and investing. I'm glad you brought that up, because if you don't have an edge in anything, how are you going to do? It might be a little tough. And that's one of those common mistakes of average investors. They don't have that edge. And if you want to learn more about how to have an edge in your trading and investment strategies, how to be more comfortable, Al, coming up in the next segment, I'd like to dissect and talk more about how these markets really work. It comes down to supply and demand, but the smart money, as you mentioned, they are creating these moves in the market. So how price really moves up and down coming up next. But I also want to talk more about how the smart money is creating income. This is Josh and Al. We'll be right back.